Hey everybody, this is DayTraderRockStar, and this is the market update, market radar, going into basically the first couple days of September. We have the jobs report on Friday. Today is Wednesday, so basically it's for Thursday and Friday, and we just want to talk about some of the conditions and some of the setups in the market. This week we started to focus on a little bit more on the futures, but a couple good setups got by me today, and I didn't point them out on the air. I'm going to go back and point them out to you so you can see what we look for all the time. And another thing is that we've, again, part of the, the forecast here, we know that we pay attention, so much to that 60-minute time frame, and the momentum is so important, even on a short-term basis. If you're talking about you have a directional bias for a day, and you could apply that to your trading, that's going to give you a big, it's going to give you a big edge on, getting your stock or whatever what you're trading is to move in the direction that you want to move in. And most likely, most of the time, we tend to have the, a rising tide will rise all ships type of effect on the markets. Not all the time, and there'll be sectors that are short, but you know what we're talking about. Not to get too much into detail, we just know that the 60-minute time frame is one of the best time frames to trade. Because it gives you a few days to work with. It's not like the 5-minute, which you get oversold and you get overbought and you're pulling back and you're moving higher and you get these gyrations, which are great for scalpers. But the hourly is even a little bit more. It's good for the scalpers also, but it's also good for people who might want to hold a couple days. So we have a good setup here going into Friday. We knew we were getting close to it yesterday. We were talking about maybe a potential reversal on the 60. We just need to get underneath that, that oversold line here. This red line represents the 20 area on this. And you can see we've been trading off of this line for the last few months. I've been actually actively, if we haven't taken SPY calls and puts, it's been off of the 60-minute time frame. This was a 60-minute divergence. We took our last hedge here on a put, and we held it just until it got oversold, and I thought that was a great trade. And I haven't taken a short yet. I've been asked to take some hedges here. I think tomorrow, when I'll consider to see if we get our move up here to that 2180 level, then I probably might take a hedge. And a hedge is exactly that's what it's going to be used for, is a hedge in case the market moves lower on the jobs report, or we get a little chop going in there. Maybe we can make some money off of that. But I'm not, overly confident in that call. I'm more tend to believe that we are going to get that move up to the top of that trend line, and I have a feeling at that point it seems like everything's going to all the stars are going to align. We're going to have the jobs report, we're going to have a trend line. This is probably going to rotate back up. I mean, there's got to be a lot of things here that could cause all this this sideways consolidation really to break out. Now I want to show you a couple interesting charts here. All right, so I got a couple good charts here, and I got these charts from Ryan Dietrich. He tweets out some great information, so if you're on Twitter, follow him. First of all, we're going to talk about the jobs report. Now, the jobs report coming out, we know that we just had Jackson Hole and Janet Yellen, Fed Vice Fed Fisher. They had some conflicting comments. One caused the market to move up, one caused the market to move down. The market's always focused on what the Fed's going to do, and if they're concerned about the potential of the rate rise, and maybe two of them before the end of the year, so the market was a little spooked. This becomes a transparent situation after a while when we start talking about it and seeing the odds priced into it. So, I don't put too much into that, but I do put a lot into, the lack of volatility going into this past month. This August, it has been so flat. The last few months have been so flat. As you could see, you can see this consolidation in the range here. We call it a daily average range. What's the range of the day? And some days you'll have big range, and it's definitely compressed. And I have a couple stats. Well, let's start off with our daily range stat. Trading range for August. Just going to move this over here like that. It'll be easier for me to just deal with it. All right, so the month trading is about 2.1%. This is on pace for the fourth narrowest of any August since 1928. Now, what does that mean? Well, when we have when we have very little intraday range, here's another one. And this is kind of a record now, pushed up here into 2016. We're over, I don't know how many days this is, probably approaching 17 to 20 days of without a underneath a 1% intraday range. It just hasn't happened. And when it does resolve, it has been resolving to the upside. And there's only a few spikes in the chart that represent a streak like this of, where we get the compression in the price, not a lot of range. And these are the big markers, 1985 and 1995, 94, and of course 2016. It's the only other times that we had such a compression and kind of such a consolidation. And from that point on, you can see we had a nice bounce off of here, and here was a really key one because you saw there was a nice ramp up here, and this is where we are now. So I don't know, we're going to see, you look back in 20 years and we'll find that this is a telling, a telling signal. So, and then I want to go back here to the jobs report one more time. The jobs report coming up. Let me see if I zoom this down a little. And you got to remember that this August here, typically the weakest of all the months for the jobs. Average number of jobs created per month in the past 25 years, 85,000. I think the consensus for tomorrow is like 170,000, maybe 180, between 170 and 180,000. So if we actually have a something that comes in like historical, measured out in a historical way, we're going to look for a lighter number and maybe not as not impressive. And then what's that going to do to the market? The market's, we're looking at it two ways. Not to think about it too much because by the time everything's said and done, you're just flat on the day. But if the economy is not as they expected, there'll be talk of them cutting back or holding back on their rate increase, and that can be perceived as a positive for the markets. If they come out and they beat, or they come close, well, the market could look at that in a positive way, or it could be, look at the thing where, we're definitely going to get that rate rise, and we might get a little volatility into it. But that's already been discussed, and it's already out there. So I'm not looking at that as a major. I think if we did have a big surprise, I think it actually could be a positive for the market. So we have all that coming up, and I have a feeling that Friday will be that catalyst. At least it'll be a catalyst and maybe something to kind of get us out of this range. And August is almost, it is behind us now. Tomorrow we start September 1st, and I don't have the historical numbers on the 1st of September. I should give Jeff Hirsch a call, but whatever it is, we'll deal with it. Tomorrow should be an interesting day. We had some. I want to go back and talk about the ES though. There was a couple good setups today, and actually we'll go back and I've tried to gotten into a rhythm a couple months ago of reviewing the ES signals for each week, and that went for a while, and then I got I had to do some things. I had to take some time off and just got distracted and stuff, but we're trying to get back focused here on the ES and trying to get the market to kind of give us a little better range and to give us better signals, because I tell you, back in, back here, there was a little better range. There was a lot of good trading going on. We were getting signals every day. Here, we don't get the signals as much as anymore. Well, at least the last couple of weeks, we didn't have many. But, I want to go back here because it's only Wednesday and just kind of go back and show you some of the setups that showed up and what we want to do, based on the, again, if you haven't seen the video, I put out a video last week talking about the Apex 5K blueprint, and basically, learning how to just take these certain setups, how to place a stop, how to time your profits, and actually put it into play and do it live on the show. But of course, you have a good setup, maybe you're at lunch or whatever. There'll be some reason or rhyme or reason you can miss a setup. That's why we have a lot of the bots and the indicators to help us out, and we get the email alerts and the text alerts when we do have our setups, but can't be there all the time. But I want to review them anyway and then show you the outcomes, because they're very easy to identify, and when you can identify them very easily, meaning they have a strict criteria, then you have to just apply it and take the trade and see what would have worked out. So again, we look for a certain divergence based on our time frame, if we were taking a 1 minute or 5 minute or 3 minute. You know, you can apply the same rules across all time frames. The big thing is, I like the 1 minute time frame, and then you set up your bracket. And again, this is all based on another video, and we're going to have the whole section on this. So you set up your bracket and you place your stop at the in this case, if it was a short, 1 tick above the divergence short. And when I talk about divergence, you know, when you have that higher high versus the lower high, that higher high is the area where you put that short 1 tick above it. And then, of course, the rotation here is really due to, you know, your criteria represents this first rotation of the 1 minute time frame, and that's not going to be a lot. You know, it's going to happen fast, so you might not even get you know, a full point. You could actually get a half, you know, 2 ticks, 3 ticks. In this case, you can actually see we came down, oversold, bounced a little, didn't, you know, then bounced back down, went down a little bit lower. You know, how much is that? What's that range? You know, what's your best position that you could get in? You have to take a lot of these things into consideration. This one would have been a very tight one, but it was not a bad divergence. You know, it did qualify as a divergence. So when you see that happen, and you see, you know, the important thing I keep on stressing, and this is something that, you know, everyone has to learn, is that the market gives you, you know, if the market decides to give you 2 ticks, 3 ticks, it's giving you that because of the setup. The setup is working. Because it rotated back so fast, and you might not have gotten everything you wanted. Maybe you got a bad fill, and you don't want to just deal. You're going to let it. You're going to gamble. Once you start to gamble, you take the strategy off the table. You know, you contaminate it by, you know, guessing or something like that. Then it doesn't work anymore. 2 ticks, 1 tick is a winning trade. If you apply the rules and the criteria and continue to apply those, because you're going to have your big trades, you're going to have your small trades, you're going to have the trades that maybe even not even work out. But the only way to really truly know how successful that is to apply that criteria and really stand by it. You know, so that's the goal here at Day Trading Radio. I want to do that. We're going to try to get it into that more in September, because we got to get out of this August. This August month is just killer. So, all right, so here was one. I'm not even going to go into if it would have worked out or not. I don't have to get out the measuring rod, but some of them will be obvious. Now, of course, we have our, you know, I map the chart out during the day when I'm on the show. And again, if you're just listening to this, you don't know, but I do a radio show, Day Trading Radio, every day, live on the air. You see these charts. So just go to daytradingradio.com. And, you know, we mark out a lot of these areas that come up on our I like to call them order indicators or entry indicators. And then when we get one, we get an alert in the on the dashboard, we'll write it down and stuff. Now, we like to confirm this. This is to make sure we don't miss anything. And again, there's a lot of other things that you have to pay attention to. The overall trend, what type of day it is, the bigger time frames. You know, there's a lot to go into trading. You know, it's just not get the alert, go short. You know, you have to understand why you're going short, how fast, how much time do you have before the rotation, especially if you're in an upward trend. There's a lot of things that you could get a little move down, and then all of a sudden you're moving back up, and you get blown out. So you want to try to get the best setup. You want to wait for the best setup. Those are going to be those, identify those divergences for you. Here was actually one right here. So nice. It's not a bad one either. And you can see that fast drop off here, and that would have got you that 3 tick to, you know, 3 to 6 ticks. But, you know, once we get the alert, we go back and we say, all right, once we get alert, is that a visual or is it a mathematical? Visual, you know, here we will call this a double bottom divergence, and I think those are very strong. And again, the visual, and again, these are all on the videos on the site and stuff. We're going to have a whole section for this. So I'm not going to go into the whole process again. I want to get through this pretty fast. But that was a setup there. Some of these I just marked off because of this was a setup also. But these are also, you know, Rambot signals. It's a nice signal. Nice candlestick there also. You see that one candle drop, another candle, the higher low, and the nice move up off of this. All based off the 1 minute time frame. I remember this trade too. I think we discussed that live. It looks like another divergence right here. And that higher low. I didn't realize there's a few of them. Now remember, this is at 6. This is 4:15 in the morning. This is at 6 o'clock in the morning. The only time I would use this technique is after 3 o'clock in the morning. Wait till the European markets open up. You start to get some volume into it. The closer to this is again pre-market U.S. markets. So it looks good. It works fine, but you have to have that volume. So as you get closer and closer, and I don't pay attention too much because I'm not at 4 o'clock in the morning, I'm not trading. Then the market opens up. You have your first divergence here. A little after 10:30, a decent one. From that point on, you rallied up. The rotation got you right up to this level, 21.75. The divergence might have gotten you in at the worst level. I mean, there was a big pop. And, you got it at 74.25. And the high was 75.75. I mean, yeah, I think it would have worked out even if you got a bad fill. And believe it or not, I actually took this trade. And it worked out. And I got out right here. This is the only trade I took this week. And it was off of that divergence. And I took it off because of that rotation. If I remember correctly. We got tagged. We got... it hit our target, whatever it was. And then it kind of chopped back down here. And then we went on. And then what I noticed today, I'm just looking for the visual divergences. So today is Wednesday. So today we opened up. We had 9:30. We had this nice bear flag. And the flag broke down. We had the oil inventories come out, 10:30. And that dropped us. It dropped us hard right from here. We were actually inside this channel, 1, 2, 3 channel, and right up against a resistance. And the news came out, dropped us, consolidated, followed through. Little bounce. Now remember the signal. The only signal we were trading. I mean, you could, and I discussed this on the show today, is once you recognize that a really established parallel channel, and we'll see it adapt into it, you could trade off of that. But most of the time in a channel like this, you will get a divergence at the end of the channel, and it'll tell you exactly where you want to be in, because that channel will be broken to the upside. And it usually comes out with a double bottom or a divergence. So here was your divergence. So this was a really nice divergence. You were hanging on the trend line. You popped up a little to 20, then spiked down, put in a reversal candle. All the criteria was there. Didn't rotate back down to 20, so you had the lower low, the higher low. And from that point on, you had a nice bounce. And then guess what happens? So you had a nice little bounce here. Once you probably could have got in, worst case scenario, 61. And then, the high here, 62.75. And then the high off of that overall move was 63.50. So, and I'm saying this 1 minute time frame strategy, even in a downward trending market, you have to be, you have to stick to your guns. So if it gives you, it gives you your profit that you have planned out, you got to take it. Don't worry about it. It would have gave it to you. Would have gave it to you if it was under, under 2 points. If you're looking for something over 2 points and you're getting into that and saying, all my trades are going to be either for 2 points or bust. The market doesn't have to give you 2 points just because it's setting up in a good setup. It's going to give you you're going to have the bias to the upside, and you have a better chance of trading this. And if it gives you 2 ticks or 2 points, that's still money in your pocket off of a highly confident setup. And then you have another one right here. And this was even better because it was a secondary one. And I stopped. I just went out to lunch here, and then we just came back, and we're just on the show. And then boom, it just happened again. And from that point on, you had a nice move here, and then look at this move. This was the big move, and this is where we really banged the table on it, because I said divergence inside of a channel, breakout of the channel coming this way. At the same time, your 60-minute time frame was set up here pretty good also, and that really just led to this beautiful rally. And at one point, you started feeling the strength coming into it. Didn't see anything. This is after hours now, and this is where we are. So 6 o'clock. We're right at the highs overnight. Nothing really going on. So that is I hope I have I have everything. That's the setups for this week, and tomorrow we'll be doing it again. But I wanted to show you those setups. I wanted really stress the importance of we're going to follow these setups closer and really stick to this really tight criteria, and you're going to see it work. And that's my my goal. The stocks, HPS stocks are all they're doing well. They're just market here on on a dead August is not the best for range and big moves. But just to finalize this, Friday's the big day. If you're going to try to guess on how this thing's going to play out, the consolidation, low volatility has proven very good in the last 3 times it's done this. It's 95, 85, 2016. Do we have a huge rally about to start here? Do we have a flush before? Usually we do flush out, and there's probably a great chance, tomorrow just to take a little hedge, just in case we get that flush and go. I have a feeling, the market tends to, shake and bake a lot, and that could be to the upside too. We could actually have really good news and the market pops and then you sell off and people are just, but I think that the odds of it, if anything does get, whippy, there's probably a better chance of a drop off and then a reversal. If we're going to even get that, So, well, I'll see you in the markets. So again, tomorrow's Thursday. We're going to be focused on the ES, and then Friday we'll be doing it again. I'll be there. Paul will be on the mic, and he focuses a lot on the ES also. All right, that's it. Let me get going. 6:29. Let me get this out there. One last note. Might as well talk about a stock or two. AXP. That tight consolidation. If this market does go, a lot of these stocks should go with it. And they could be nice. These could be nice rallying stocks like American Express, MasterCard, Visa. They're just off the highs. We're talking Google needs to get back up to the highs. It's just flagged out. All these major bullish flags just starting to turn back up. There's some good momentum building here. Facebook, at the highs. There's some good stuff out there. All right. I'll see you in the markets.